Thursday, April 29th, 2021, Monaco 64, home of alternative economics and contrarian views. So today we're going to look, unfortunately, at how there's no end in sight to monetary and fiscal stimulus. And it has been going on for 50 years. It doesn't matter what party is in charge of Congress or the executive in the United States. Yes, some of them lean left, some of them lean right, but government keeps getting bigger. Corporations love big government. The welfare statists love big government. Right now it's shifted left, but it doesn't make much difference, unfortunately. Yes, I'm going to reference a couple of articles. One on the Federal Reserve that had its meeting, FOMC meeting, ending yesterday, and what they said. And the other one on new proposals by the current administration in the District of Criminals, or DC, if you want to call it that. And as usual, I'm going to reference one of my favorite books. And I read this book back in the late 90s, I would say, probably 1999, early 2000. It took me a while to read it. It's a big book. It's worth reading. It's what drove me to ask a lot of questions, philosophical questions about the role of government. It's a must read, in my opinion, and it's called Atlas Shrugged by Ayn Rand. I think we're going down the road, unfortunately, of which that book describes. And I'm going to go through the synopsis of the book on Wikipedia. I've actually ordered the book again because I read it such a long time ago. It was a paperback. I think I lent it to someone, never got it back, but I want to read it again because it's been a long time. And it's what actually probably also subconsciously drove me to look at free markets, drove me to the Austrian school, and eventually to sound money, to start buying gold and silver to protect myself. And before I go into these articles and the book, just wanted to say, for those of us who love small government, who love economic freedom, individual freedom, it's hard. There is no really place to escape right now. A lot of people think, oh, I'm going to leave the United States, go somewhere else. But there isn't anywhere really. If the United States is going down this path, you can bet other countries are even worse. Am I trying to discourage people from trying to find a safe haven? No, but I would think twice before going somewhere else. Of course, within the United States, there are places that are freer, and that's fine. But to go to a different country is a big step. And there's the old saying that the grass always seems to be greener somewhere else. So that's what I'll say about that. So let's quickly look at these articles here. I took the first one from the Financial Times, big globalist publication, but you have to look at these things. Jay Powell says Fed still a long way from withdrawing monetary support. So it's all the double speak, and monetary support is more debasement of the currency, more taxation, because that's what inflation is. It's a hidden tax. So another reason to keep stacking gold and silver. Yes, the markets are frustrating. The price action in gold and silver are frustrating. But as I've said many times, it just gives you more of a chance to get out of the system. And because keeping your savings in the fiat currency, you are financing the looters. That's what they call government in the Atlas Shrugged book. Looters, I think they call them moochers as well. So that's what you're doing. And it doesn't matter what side of the aisle, left or right, they're all at it, unfortunately. So it says central bank paints rosier picture of U.S. economic recovery, but sticks to ultra dovish policy. So, I mean, he's saying that the economy is getting better, which of course heavily debatable, heavily questionable. But at the same time, he needs to maintain the ultra dovish policy. What does that mean? Well, it means even more monetary accommodation rates at near zero, the Fed funds target, $120 billion of funny money every month to buy government bonds, treasuries, and mortgage-backed securities to keep the housing bubble going, to make sure that the general public can't afford to rent or buy a home, right? I mean, it's crazy. So this is the modern day looter here, Jay Powell. I mean, he would have been a good character in Atlas Shrugged. So let's just quickly go through here what the FT is saying. Jay Powell signaled that the Federal Reserve was still far away from withdrawing support for the U.S. economy, even after the central bank upgraded its view of the recovery. And I will reiterate, and I was saying this years ago after the '08 crisis, that it was going to be very hard to withdraw all the stimulus to raise rates. And I was proven right, because when Powell actually was Yellen started it, and then Powell accelerated the normalization in 2017-18, they had to stop. For people to think that we can go back to normal, to raising rates and unwinding or tapering QE and then unwinding it, they are deluded, because the system is so far gone into an inflationary bubble and fiscal bubble that if they try to do that, the whole thing will implode. But it will also implode because this is going to lead to a massive hyperinflation and collapse of the currency. So it says in a press conference following the conclusion of policymakers' two-day meeting, the Fed chair affirmed that the U.S. central bank was not yet ready to discuss tapering. He's not even ready to discuss it. And tapering basically is not unwinding QE, is just letting the balance sheet unwind on its own. And how does that work? Well, let's say the Fed has 3-month treasury bills on its book, on its balance sheet, and then after 3 months they mature. So unless they buy it again, that is paid off. That comes off the book of the Federal Reserve, and that's what tapering is. So he's saying that they're not even ready to think about it. So there you go. We have had one great jobs report. It's not enough, Powell said, referring to the latest monthly data, to which showed the U.S. economy added almost 1 million new jobs in March. We're going to act on actual data, not our forecast. We're a long way from our goals. Powell's comments came after members of the Federal Open Market Committee offered a brighter picture than they had in March, but kept interest rates close to zero and debt purchases steady at $120 billion a month. So there you go. There's no end in sight, as I said, to monetary stimulus, now to the fiscal stimulus. And I don't think it would have been much different under another administration. The stimulus would have gone somewhere else, but there would still be big government. So this is from the Daily Telegraph, UK newspaper. Joe Biden signals return to big government as he presents $4 trillion spending package. So there you go, $4 trillion. What's a trillion, right, these days? President says it's time for corporate America and wealthiest to pay their fair share as he outlines trillions of dollars in spending. So yeah, it keeps going from left to right. Under the other side of the aisle, corporate America does really well. The general public lags behind. And then you get the other, it's like a seesaw. Now you get maybe corporate America not doing as well, and the general public supposedly doing well, right? Because I don't think it's healthy for either big business or the general public to get everything for free or to get help from government, because we need to help ourselves. We don't need government to do things for us. And the way to look at it, government doesn't have any resources. They have to take from one group and give it to the other. So it doesn't matter. And I'm not defending corporate interest. I'm not defending welfare interests. I'm just saying both are wrong. We need government to be minimal and government to just administer the rule of law. Government should not be involved like this in the economy. And it's not happening just in the States, of course. It's happening here in the UK and Europe, especially. Well, Europe, they have a head start on this kind of policy. So it says Joe Biden declared the United States is on the move again as he marked 100 days in office with his first address to Congress. The U.S. president outlined trillions of dollars in post-pandemic spending plans, including the largest jobs plan since World War II. So, yeah, they talk about trillions as if it was like a dollar these days. Just to think that when Reagan was inaugurated in 1981, the national debt was less than $1 trillion. Mr. Biden said, "It is 100 days since I took the oath of office and inherited a nation in crisis. Now I can report to the nation America is on the move again, turning peril into possibility, crisis into opportunity, setback into strength." So let's skip this propaganda and look at the figures. Mr. Biden said his $2.2 trillion infrastructure plan represented a blue-collar blueprint to rebuild America. And now he's proposed another 1.8 trillion. So that's where they get the 4 trillion from. It says his proposed 1.8 trillion American Families Plan was a once-in-a-generation investment in child care and community colleges, which would help America outcompete China, he said. There you go. It looks like America is going further and further down the path of socialist Europe. And you can see how Europe is doing economically. Countries like Italy, France, Spain. So there you go. Unfortunately, it's not good news. Government is continuing to grow through monetary policy, through fiscal policy. And I have to admit, it's difficult to avoid the repercussions of this. But I think the important thing is that you know who your enemy is, and the fact that big government is not the solution. And I think people need to try to avoid dealing as much as possible with government. And I'm not here to give you the exact details of how to do that, because everyone's circumstances are different. So let's go to Atlas Shrugged, which I highly recommend. It is a long read, but I think it's more relevant than ever. So let's go through the synopsis here. Wikipedia gives a synopsis, and it's quite good. And it says, Atlas Shrugged is set in a dystopian United States at an unspecified time. And this book was written in 1957. So it's over 60 years old. In which the country has a national legislature instead of Congress, and a head of state instead of a president. The United States also appears to be approaching an economic collapse with widespread shortages, constant business failures, and severely decreased productivity. Sounds familiar? The government has gradually extended its control over businesses by passing ever more stringent regulations that increasingly favor established and stagnant corporations, especially those that have good connections in Washington. And I would say there's also now increased control over social control is coming as well. There's very little mention of historical people or events not even major events such as World War II. Aside from the United States, most countries are referred to as people's states that are implied to be either socialist or communist. So there you go. So with that, let's quickly look at the markets this morning. It's just gone past 8:30 a.m. London. We've got spot gold at 1780. It's down just over $1. The range has been 1777 to 1790. Silver is up 18 cents, almost 1% at 26.35. Range has been 26.15 to 26.50. The Dow future is up 130 points. NASDAQ 100 future is up 108. S&P is up 24. So not surprising to see the stock market higher with talk of more monetary and fiscal stimulus. Of course, the flip side of that is the dollar losing value. Yeah, the pound is up 0.2%, 139.65. The euro is unchanged, 121.20. The dollar index did drop yesterday. The dollar is a little higher versus the yen this morning at 108.83. Dollar's down 0.2% versus the yuan at 646.30. What about the commodities? Well, high-grade copper is up just under 1%. And it's about 12 cents away now from the all-time high. We're at 453. WTI crude is up 24 cents or 1/3% at 64.05. I think crude is looking pretty good, the technical picture. I know Goldman Sachs came out and said that they think crude's going up to 90 or 80, but I think technically it looks good, and it's not because Goldman Sachs said it that I'm saying it. And to finish off, the 10-year yield is at 164, up 2 basis points. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.